Yields continue to rise, and the Nasdaq, the Qs, took it on the chin today. Holy moly, down almost 3%. We got some very interesting charts and price action taking place. If you're new here, you're watching the Daily Stock Market Brief. My name is Michael Silva. Today's date is March 8th. We do these videos Monday through Friday, 5 days a week. I just got back from a vacation here recently. Nice little trip down to Southern California just to get a little R&R, if you know what I'm saying. During the Daily Stock Market Brief, we look at indices, stocks, we look at indicators, commodities, dollars, bonds, yields, really big picture stuff to help us really understand where the market might be headed. And I do this every day, and this isn't to make, by the way, predictions. This is really just me sharing what I see out in the markets with all of you. So I hope it helps you guys going forward. The audience has grown quite a bit, so I appreciate all the loyal subscribers continuing to come here and watch these videos. In today's episode, we got a lot to talk about, so let's just go ahead and get right into it. Oh, hey, what's up? Welcome back. Before I hop into this specific chart, which you're probably familiar with already, I just want to say one thing. There's been that spam account that looks like me. It keeps on coming up and spamming all the comments. Just know that that's not me, okay? That's a spam account. I'll never ask or give you a WhatsApp number or ask for Bitcoin. So keep that in mind. This chart is the S&P 500 on a long-term candlestick perspective. Okay, the monthly, every candle here represents 1 month of data. And I just want to point out the 10s and 2s yield curve down here. That's what this is. And every time it gets inverted, and I've said this before on a previous video, and then it reaches up to this, the yield curve of 1.0. So this is the curve steepening as it moves up. And you can see the past 2 times that it did get inverted and move past that 1.0. We've seen some price action really head north. And that was both in the in the 2000 tech bubble burst and then also the 2008 financial crisis. And we are really pressing these levels up. We just recently crossed back above 1.0. And I mean, really we're flirting with this previous support and now acting somewhat as resistance, and we're doing so on a pretty gnarly negative divergence here. You can see the RSI right here was super high, right? And then we're significantly lower, although the price action is really high. So I just want to call this out. This doesn't mean that the market is set up to pop or, this bubble to burst or to see a crash. But you got to understand the context here while we're seeing these gigantic price swings in the market as these yields continue to rise and these curves continue to steepen. It makes sense when you look at the charts like this. Now, from a daily perspective, this is the dashboard. We're looking at the top here, we have utilities, and utilities is typically a risk-off move. Now, we've been seeing this a few times here and there, but we haven't really been getting any follow-through. So we're going to keep an eye. If utilities continues to find strength here, that can really suggest that we're seeing some sort of a rotation into risk-off assets. So it could be potentially even bonds, and we're seeing like the 10-year yield really come into these oversold territories, and we're seeing the bonds really get into the bonds get into oversold, and we're seeing the yields really move into overbought territory. So it's very interesting. We're also seeing tech really start to get hammered down. You can see right here, technology sector down 2.42% today. And then the Dow Jones, had a pretty strong day. We reported this on the last video that I did. It was coming into this oversold territory on the BP charts, and it looked like the internals of the market were setting itself up for somewhat of a bounce. And we saw bounces today, but we did see, towards the end of the day, some big sell-offs. Now, I want to point out right here, what is this? What is this note? I don't know what that was. That was weird. I don't know what that was. Okay, yeah, so right here is the XLU over SPY. This is actually part of Michael Gayad's beta rotation strategy, and it really helps you determine going from risk on to risk off. Now, this is early in the week still, but when it crosses above this line and closes above it on a weekly time frame, that suggests a risk off environment. So it's not there yet, but we saw a very quick spike here to start off the week. This right here is the daily chart of the S&P 500, and the price action is acting very similar as it did in 2000, minus obviously the pandemic really started driving this market lower. And right here we saw it pull back, and now we're seeing it bounce, and we're kind of struggling right around this 3,900 level. So we're going to be keeping an eye on this. However, from a seasonality perspective, what I want to really call out here is I wanted you to look from here on April. And April was right here around this bottom. And then we really saw a big move to the upside. And we're coming into April, we're still in March, but we're going to be coming into April here soon. And March, from a seasonality perspective, typically is quite choppy. So this is a seasonality chart looking at a 20-year range. And this is pretty accurate to what's taking place right now. We're seeing it move down and very choppy. However, what I'm looking forward to is a potential huge move into April. Now, this could very well make sense from a stimulus standpoint. And also, the Fed is going to be talking, I think, later on, more towards the middle of this month. They had their FOMC meeting. Don't quote me on that. I got to look at the dates. I don't have it in front of me, but I'm almost certain. So I'm looking, to kind of play it easy during all this chop, but going into April, if we do seize that strength kind of come in, we can set ourselves up for a really big move to the upside from a seasonality perspective. That makes a lot of sense. So now let's hop into the indices and kind of just look through the daily time frames and some 30-minute time frames. We're going to start off with the Wilshire, the broad market index, right? The Wilshire 5,000, so a lot of stocks to make up this. And I want to call out a couple things. So we called out when these moving averages cross down beneath each other, and that's bearish, right? We saw that also take place right around here when the price percent oscillator crossed itself over. So the momentum is trending down right now, and we're seeing some weakness. So we saw some strength, this 39,500 level. This horizontal line was where the year opened up. So we're still positive on the year, and we saw some strength from it. But look at it's these bounces, you got to understand, it's short term, and it's trying to swim up a river as these moving averages are currently crossed over. So you can see when they crossed over here, more to the downside. When they crossed here, we had more movement to the downside. Here specifically, this looks a lot like September, where we crossed down, we came back to test the 20 period and then headed lower. So we might be in for something very similar, going into potentially April. So we got to see here if it can break out to make a new high. We'll get into some other trend lines and some areas of resistance on the other indices. Let's start with the S&P 500. You did notice that I had a little head and shoulders on the Wilshire, and I'll call it more out here on the S&P 500. Now, first off, let me just say that the price action has been quite wild, like I already pointed out in the seasonality perspective, but the trend itself isn't really quite breaking down by any means. So it's nothing to really get too worried about. What I want to call out is some possibilities here. So first off, there's a lot of things going on this chart now, just because I have to watch quite a few things now. So first off, this trend line right here, you can see it's been held as support very frequently. So 1, 2, 3, 4, 5 times it's been acting as support. So that right there, if it breaks, I think we can head lower into this area where right around 3450 to 3600 would be that target down move, especially if we start breaking down this could be the neckline of a head and shoulders pattern. Okay, so this is a left shoulder, you got the head, and then a right shoulder potentially building itself out. These purple lines here represent somewhat of a, you can call this potentially a bull flag, you can call it a descending broadening wedge too, but what we got to keep an eye out is a break of either of these trend lines. So for example, this one heading down, this right here has been holding as resistance. So if we break above it, I don't see why we couldn't head to 4,000 quite quickly. So we're going to monitor that. Now this candle right here, this is a shooting star type candle, which typically means that there's more movement to the downside. However, we're going to look at some internal charts, and by internals I mean some stock market indicators, to really kind of help determine if this might continue to head lower, or if we're kind of in these oversold territories here. And you'll be quite surprised because the market is throwing up all kinds of interesting indicators. So if you're confused during this time and you're wondering what's going on here, just know that this chop right here, you should be a little confused. You should kind of have, difficulty trading this environment, especially if you're a longer term holder and you're getting kind of like, sloshed around. On the 30-minute time frame, you can see this right here. You can see this descending broadening wedge pattern a little bit more clear. But what I want to call out is notice the stair steps down. Okay, this is trending lower and lower. So this won't change until we start breaking past one of these previous highs. So as you can see, a high here, lower high, lower high, lower high. We have lower lows and lower lows in place. So right now, the trend is down from this high from February 16th. So it's going to take a lot to reverse this trend. It's still possible, but we got to be aware that look at these aggressive moves to the upside, then down, then up, then down, and then up. These are very, very, very volatile times where we're seeing these massive price moves. So you need to be very careful in this environment. But when you scope out and look at these stair steps, it can help you see the bigger picture that if we start breaking above and making a higher high, that and then a higher low, that means that we can be shifting back up into that upwards momentum. And one more time on the daily time frame, I want to call out still when you scope out and look at the bigger picture, the 20 period moving average is still above the 50 and it's still above the 200. So we're still overall trending up despite this pullback so far. Now let's hop into the Dow Jones. The Dow Jones, I really just want to call out one thing. We reached into an all-time high new territory. We didn't close at an all-time high, but we definitely reached above that 32,000. That 32,000 level is now that area of resistance. So we could looking for a close above it to continue pressing forward with this. Now the moving averages are all trending up and the price percent oscillator does look like it wants to cross over too as well. We have a slight negative divergence building in the RSI. So this could have been another fake out like we saw here and more move to the downside. Okay, there was quite a bit of selling pressure towards the end of the day. So we'll be monitoring this coming into the rest of the week and also future weeks. Here's the Nasdaq. The Nasdaq is the one that is really taking on its chin, getting beat down, almost down 3% today. Look, we made a huge hammer candle here, had no follow through, unfortunately, for the tech stocks really getting kind of hammered down. One thing that we mentioned was this pink box for the target. Still, the 61.8% retracement level is holding as an area of support. We haven't even reached down to it yet as measured from this pullback. However, from a weekly perspective, we also mapped out this key level at 271. That would make sense to me because if we do reach down into the 38% retracement level, by the way, that's a very important fib level, that would come down right into this range to fill this current gap, which I don't have that. I usually have a gray shaded box here, but so there's still downwards pressure. And if yields continue to press higher, we're going to see tech stocks really start to fall or continue to move in a downwards direction. I wouldn't be surprised to see, Apple with a price target of around $100 just by some of the charts that I've recently seen. Now, another thing that I want to call out is the SOXX. This is the semiconductors, and semiconductors make up a huge portion of the Nasdaq composite. And you can see we've been monitoring this rising wedge and we broke that trend. We're currently below the 20-week moving average. This is a weekly time frame. It's just the start of the week. So, the week has a lot more time to go through. We're right around the 23.6 fib level. If this is a full breakdown, we could see it, make bounce. And, when you get pretty significant rallies on if this is a top or a real true breakdown, you can see it bounce significantly higher, but it might not make a new high, and you can see it potentially all the way come down to a price target of 61.8% retracement level at 272.11, which would put it right around this February high. And that would, to me, make sense because this has just been on a monster tear. That would be a healthy correction, in my personal opinion. But the immediate downside target would be that 38.2 level, and that's at 337. So kind of a zone right around there. And it looks like it's heading there, but like I said, still, a lot of time left in the week to see where this closes. If we close below the 20 period moving average, we haven't had a close below that since May of last year, really. We started closing down at, technically, our first close really was in early February, late March, and then we held down there up until April. So, we'll watch it. We'll keep an eye on it. But as of right now, pretty bearish breakdown in the SOXX. Here's the cues on the 30-minute time frame. I just want to call out again, lower highs being pressed down. So until we break out of that, the trend remains down in the short term right here. You can see this looks like somewhat of a dead cat bounce, and we ended right around that $300. If we start taking out that level, there's no reason why we can't continue this trend lower. Just know that shorting this market, especially during times, and I really want to drive this point home, because you might think, okay, if it's breaking down, this is a good opportunity to short it. Not necessarily, especially if you don't know how to be tactical during big moves. So for example, if you were shorting the market and then on Friday you got ripped your face off to the upside and got lucky here on the downside if you held it, but chances are you would have covered there. So there are significant rallies. Now, what I really want to drive home is we're seeing the 10-year yield in very, very overextended territories, overbought, and we're seeing the bonds very, very oversold. So it's not necessarily the greatest area to start going short. This is something that we should have monitored, obviously. Well, we have been monitoring, or you should have been monitoring a little bit earlier in the process to catch these moves. Now, if you are short because you're hedging some long positions, there's definitely certain tactics to do that, but just be aware, you can get very lucky by shorting around these levels and it can continue to fall, but there's going to be some face melting rallies as we've seen already, from boom to the upside, boom to the upside, boom to the upside. So it's all a matter of really just your pain tolerance going into certain trades. You never want to over leverage yourself on anything too big, because you can get hurt in these conditions quite quickly. Let's look at the Russell 2000. I'm going to show weekly time frame, still in that rising wedge. First technical breakdown of that rising wedge, I think that we'd easily hit that 38.2 to 50% retracement level. That to me would be just an excellent opportunity. Now keep in mind, from the weekly perspective, the price percent oscillator is going to bearish so far. Okay, so far also on the other indices, when we saw this crossover, we saw continuation. So this could be the early stage of a larger move to the downside, perhaps. Now keep in mind, April, we see some big rallies in April, so just note that can change very quickly. This could be just a little fake out and then move higher. So we're going to watch these technical levels to see what plays out. On the daily time frame, we've really been just consolidating within this channel. We have 230 as a high and 205 as that low in the channel. Price percent oscillator still heading down. We do see the histogram kind of turning up a little bit here. So perhaps we play around in this channel for a little bit longer before breaking out of it to the upside or to the downside here. And then on the 30-minute time frame, I want to just call out, once again, lower highs being placed in until we start seeing changes here, where we start seeing higher lows and higher highs. The trend still remains to the downside. Now let's hop into some stock market indicators. This helps us get a better picture on sentiment of the market, breadth of the market, and it really helps us add in extra layers to our market analysis. Now, this is the BP NDX. Why I've been saying the BP NDX, the NDX, the Qs, might not be the greatest place to short here, even though, we saw a big down day today. But look at the uptick today in the BPs. So we saw an uptick here suggesting that internals are actually strengthening. And we see the positive divergence. We see this overextended. So it's very weird that we saw this down day in Nasdaq, but we're seeing some internal strength come in. Now, this could be because we see other sectors seeing some strength, while the tech sector is obviously a little bit of a laggard. But this also does suggest that, we're setting up for a potential significant bounce. So I'd be very careful here as we're seeing this weakness in the Nasdaq, but yet we're getting overbought in the 10-year yield, and we're seeing the bonds also get pretty oversold. And there's been a pretty strong correlation there. As the 10-year yields go up, we're seeing these tech stocks really head lower. So, this looks like a recipe for a pretty significant bounce. So we're going to have to keep an eye on it. Even though there's immediate downside still in play, nothing is for certain in the markets, but this is to help make you aware and make myself aware, is why I look at these market internals. Now, here's the BP SPX. This is the S&P 500 percent of stocks on the buy signal. Also an up day, right? So very interesting price action. And this is a positive divergence here, technically a positive divergence right here. I thought we might see it head a little bit lower. We still may. That's still a possibility. But just note that we saw some strength in the internals today. So also, what's going on here? It's very interesting stuff. Lumber to gold ratio. This is the 13-week rate of change right here. We're still well above zero, but we have ticked down just slightly. We're going to be looking at a gold chart here on the commodities section. And, it looks like it's breaking down, but there's also something interesting that I want to point out as well. Here's the NIMO breadth minus, 12.39 on the reading right here. It's not overextended by any means. This makes sense to me on this down day that we had. So we're going to continue to watch this negative divergence play out like it did here in 2020 and see and play certain extensions. So for example, when it comes down to minus 60, we can see some bounces as we've seen here, and over here too. And then when it gets up to this top range, that is a signal that we have an overbought territory, which would be a good area to take profits from. All right, so next one I want to call out is this one, as I showed earlier, the XLU over the SPY, the beta rotation strategy. I just want to call out one more time. We've seen a significant move to the upside here. very fast price action. Doesn't mean that it's going to cross and close over, but we'll bring this back up at the close of the week to determine whether or not that it should be something taken more seriously if we are on a risk-off environment. Now let's look at commodities. Commodities are very, very interesting stuff. So we have gold that's been really kind of getting hit hard to the downside as this also 10-year yield has been rising. Now you can see here, this peak was actually right around the 10-year yield bottom in 2020. Okay, and now we're seeing some very strong momentum to the downside, breaking down from some key levels here. So this area, it really does have to hold, or we have some immediate downside to, really this 1450, 1350 range potentially, even right down in there. So what I want to call out though from a daily perspective, this blue line, okay, kind of squiggling through this chart is the 200-day moving average. And I want to show you that we're 10% below the 200 period moving average, and we're in oversold territory. Now, I was just kind of interested to see, okay, so when we made these big movements to the downside, maybe potentially we revert to that mean. And I wanted to look at the last times that we've seen movements around, 10%, below the 200 period moving average. And you can see here, I marked out some, dating back to 2014. You can go back further and find other ones, but there was some significant, even bigger than this. But yeah, you can see 10% drop, 11% drop, 9% drop, 10% drop, 8%, 11, and 11. And you can see that these overextensions led to some pretty significant rallies to the upside. So that doesn't mean at all that we're about to see a big rally to the upside by any means. But I just wanted to call it out because it was, somewhat interesting to see that we're kind of moving within that same range. We've had some previous price action suggesting when we get these oversold territories from a 200-day period moving average perspective, we have some pretty nice rallies come from it. Silver was pretty much flat today. Long upper wick, though, still struggling between the 61.8 retracement level and the 50% retracement level. And we did break down through that support. So we might get a back test and head lower here. The rate of change did uptick just slightly and still that positive divergence. So silver to me is both an industrial metal, obviously, and a precious metal. So it's not trading quite like gold is. It's still in this somewhat cupping pattern. I still am building out a silver position. So I still like the long-term outlook on both silver and gold. It's just taking some downside pressure as of recent. So we just got to look at some key levels to make sure that, when the opportunity presents itself, we're ready for some potentially really, really nice rallies in those two commodities. Black gold, WTIC, light crude oil. This looks like some dark cloud coverage. So if we get below 64, I think we have immediate downside to around 60. What is dark cloud coverage? It's a candlestick pattern. You can see it gapped up, headed higher, but then closed more than halfway into this pretty bullish looking candle. And then on top of that, it was followed by a big move to the upside. So we're seeing a little weakness here. Still overall though, it reached up to $68 today, which is a pretty aggressive move, but then obviously we saw that weakness. So overall trend is bullish. I think if we get below that 64, I think our immediate downside is right around 60. And then we could go from there. Bitcoin still struggling around that area of resistance. If we break out, I think we're going to easily come tag that 57,500. So this could present itself for a pretty good opportunity. You can see the MACD right here. Looks like it's about to start crossing over to make a bullish crossover. So this little setup right here could be just a really solid move to send Bitcoin, even potentially to make all-time highs, which we've seen the lower, a low here, a higher low and a higher low, a high, a higher high. This could be the start of a potential move, even more aggressive to make another higher high. So keep an eye out for that because it does look like a good setup, unless if it obviously breaks down through this 42.5 and puts in a lower low and obviously then a lower high. That would suggest the trend potentially could be shifting short term here. Then the dollar, this one should be on everyone's eyes because we've been waiting for it to cross above 92. Crossed above 92. Now let's see if we can hold it above 92 for a couple trading days. This right here suggests, one thing, we're seeing gold and we're seeing silver, we're seeing certain commodities start to weaken. And that makes sense as we see the 10-year yield rise and we're seeing the dollar continue to rise. Now, dollar is a heavily shorted position. So if we start seeing this squeeze to the upside, that can be pretty crazy. So right now, short term, We just put in a higher high and we have that higher low. So the trend right now, short term, is trending up. Now, overall, it's still below the 200 period moving average, but it is setting itself up. If it can hold up at these levels for a little bit longer, you know, if it comes up to 95 and 96 and the Fed still doesn't step in and do something around yield curve control or operation twist or something to ease the markets or let them know, that, they're not going to be raising interest rates, because that's kind of what the market is pricing in, that the Fed will be raising short-term rates. We'll see what takes place as inflation continues to kind of, market is pricing in inflation. So we'll see here very shortly with what they report on. From the weekly perspective, this looks like just a solid breakout so far. So no complaints here. But like I said, if the Fed steps in, that'll send the dollar. That can take out these lows right here, the 2018 low and the 2021 to 2020 low right here. So we'll see. We'll keep an eye on that. But as it stands right now, it's moving quite aggressively to the upside. Now let's look at bonds and yields. The 10-year, obviously, this is what I mean by overbought. It's very frothy there on the RSI as it breaks through this kind of resistance and heads higher up into the 1.9 to 2.0 range. If you look at this chart right here, you can see we closed at 1.59 on the 10-year, 2.31 on the 30-year, and you can see the curve that we showed here at the very beginning of the episode continues to steepen. And, we saw a little bit of an uptick here on the 2-year too as well. So we'll see how these lower term rates, they've been kind of just plugged down to zero. I believe the 5-year, I don't have on this chart, but the 5-year has been rising up pretty good too here. I'm looking at the 30-5 steepener right here, but we're still putting in higher lows. But you can see this one's kind of heading down as this one has been steepening. So we'll keep an eye there. Here's the TLH. You can look at the TLT too as well. This is the 10 to 20 year treasury bonds. Very oversold, and we're once again oversold here. So if this price action continues to head lower and we get, I think the bond auction here is this week, tomorrow, the 10-year or the 30-year the next day. I can't remember the exact ones, but if this heads lower, that could be a positive divergence building in oversold territory, which could set itself up for a pretty good move to the upside. Not to mention, the bond market's heavily shorted as well, like historically shorted right now. So if there's a squeeze, it could be very, very epic during a risk-off environment. So buckle up. It's getting very, very interesting here. I personally have been a lot mainly in cash, and I don't plan to change here very early on. So that's the rest of it. I don't have a conclusion slide at the moment. But yeah, that was the daily stock market. That's all I have to do, just to kind of conclude my thoughts. We have some very, very interesting price action taking place in these markets. We're seeing large range candles, which suggest more drama, more emotion. We're starting to see, more frequent things trending, like random stuff on Google Trends and certain hashtags on Twitter, like stock market, right? We're starting to see these trend more frequently because of the fact we're seeing a lot more drama and emotion. What you need to watch is the dollar and the 10-year. And some of these key levels that we mapped out. Overall, my personal setup during March from a seasonality perspective, it's a lot of chop. And what we're seeing here is very similar. So we're going to just know, is the Fed going to step in? Chances are probably eventually they will, especially if this continues to kind of move forward as far as the yields go. And if that is the case, we could be setting ourselves up for a significant rally here in April based off that seasonality perspective. So me personally, like I said, I've been holding a lot of cash. I've been building out silver position, gold position, but those are just long-term holds. And then I have recently just moved my money into my brokerage account because I'm going to start daily trading videos again, so you can see and watch me talk through scalping the market and kind of finding some short-term setups. And you can see when I get stopped out and lose money. You'll be able to see when I can make some good profits, and we'll go from there. But yeah. That's all I got for you on today's episode. Hope it helped out. I will talk to you all later.